Now, a company like that's going to be successful because it has scale. I mean, what prevents Publix, for instance, has a new program where they have a green brand that essentially does that it's completely organic and raised in a natural way. So right off the bat, I think from the standpoint of establishing a brand, that's not too hard. It's being done already, from the natural and organic standpoint. From the purity standpoint, that should work well. But going back, is that something of the barrier entry so great that it's going to prevent supermarkets from competing directly with that? Or are they just going to go ahead and take the brand because it has scale?
I think they're going to embrace it. Seafood presents, and chicken, for instance, 87% of chicken, raw chicken, has salmonella on it. It's frightening. If you don't cook your chicken entirely, you're going to get sick.
Right.
If you take that chicken and you treat it with the iPura system, it's essentially pathogen-free food.
Now, where is that done? Is that done at the supermarket level, or is that done at the food processing?
At the food processor. Essentially, if you think of the food processor as a big line, the last component is a clean room. Essentially what happens, it's really kind of humorous, it's called a non-thermal kill step. What happens is say the fillet goes into the non-thermal kill step, and it's subjected to pressure variations. So it goes into a vacuum, and then the pressure comes up and it goes down. And during this period, prokaryotic cells, which essentially are cells that have no nucleus, they only have a thin membrane, that's what your bacteria are. Ultimately, the pressure causes the cells to explode, and then a non-toxic antimicrobial wash that is approved by the FDA washes them away, and then it's vacuum sealed. So you now have pathogen-free food. In the world of seafood as we have it today, the contamination levels are off the charts, and there is no way of preventing it.
Great. Well, David, thanks for those comments. We're now going to take a break and have a pause where we go and take a look at our finest known facts.
Welcome back. Listen, I want to pick up right where we left off. Let's talk about food global. It's global food technology. Yep. What is the symbol?
They're not trading
yet. They're not trading yet. This is something that may be coming to market soon.
Right. They're looking to go public in the next 2 years.
Now, in terms of the size of them coming public, when a company like that comes public, have they already established themselves in the marketplace, or are they at the point where they're about to break out?
Very challenging. This company's been around for about 13 years. They've raised $35 million privately, friends and family and people that know about the technology. What they're doing right now is they're establishing deals in China, in Chile, and Vietnam. So their intention will be to go public when they have the deals inked and we have a clear picture for what their financial forecast looks like, which would hopefully be in the fourth quarter of this year or the first quarter of next year.
That's a good kind of summary of where they're at. But in the course of companies that you do work with, what do you find the typical progress is from a company raising its first round to its second round to maybe a third round? Does it then go public, or does it get bought by another company? What is the typical cycle you'll see for a company ultimately getting public, and how long does that take?
Well, typically when a company goes public, they pick a spot in the marketplace where the market is looking for something. To use an example, let's talk about Homeland Security. There was a company called Coda Octopus. It trades on the over-the-counter bulletin board, and they came up with something very, very unique: 3D sonar for counterterrorism in the harbors. They were able to raise, I'd say about $17, $18 million based upon the fact that they had this great technology.
And the people they raised the money from were?
Institutional.
Okay.
There was friends and family, then the institutions came in and they invested in the company, and the stock went to about $1.75 or whatnot. But then we got the market downturn. And this is when we look at, as an investor or an investment banker, we look at this company, for instance, it's doing about $20 million in revenues, close to a break even right now. All of that, the basic components of those revenues are their core businesses, which is the command control center and the software. Their actual Echoscope, which is the 3D sonar, is very, very small component of its sales. So when you look at the market cycle, will this company be bought out, or will it come back strongly, as soon as the sales of that instrument become strong, you can expect that the stock will reflect that and get way ahead of itself. Whenever you have a paradigm shift, whether it's an eBay, something that changes the way people live, the way they perceive the world, those stocks tend to get ahead of themselves when the small cap and growth stocks come back into favor. And right now they're very, very out of favor, but it's a place that we look at both for financing and for investing.
What are the, we're talking about the themes, going forward with the election coming up. It seems to me that anything that's solar, biomass fuel, homeland security, food, to increase the food supplies. What other themes out there should investors be kind of looking at as we approach the election?
Well, there's two actually, but let me just mention one thing that just came into mind. We were talking about China before, and we were talking about basically going green. Because anything in every industry that has a green component basically is in the right perceptional area, and it's in an area where margins can go up because you can charge more. One of the things I saw this week was a company came to see me called Candy. It's a Chinese maker of mini bikes, fun vehicles, and they went from 10 to 36 million in sales last year. Quite profitable. But what was interesting was they're introducing a smart car that gets 60 miles to the gallon at about a third the price of Mercedes. So we talk about going a green idea. Look, your kids going to college, you can buy them a car for $7,000, it gets 60 miles to the gallon. I think that's an interesting idea that kind of fits the theme.
And how fast can it go?
That's a very good question. I asked them that question, they said 60 miles an hour.
Yeah, but my point is that if you're buying it for your kid and it's that cheap of a car and it has that kind of range, you don't want it to go too fast.
No, you don't.
It's a way of controlling the situation. So let's go on to some of the other themes.
Yeah, I think one of the themes that my firm does a lot in the life sciences, and we're seeing a big shift in the life sciences. For many, many years, it was thought that biotechnology was going to take over and become the big game in town, and that pharmaceutical companies were going to become a lot smaller. But we've had a lot of failures in biotechnology. So one of the things we see out there right now is a new breed of stock, or a new sub-industry. We call it specialty pharmaceutical. Specialty pharmaceutical companies represent the in-between between generic manufacturers and biotech and pharmaceutical companies. And why they're interesting is because what they're doing is they're focusing on new delivery systems for old drugs. There's two things that are interesting in that. The first thing that's interesting is that you can minimize side effects from patients. If you can go from something you have to ingest to a cream, you can move from something that has to go through the liver to something that doesn't have to, which means you can lower the dosage and minimize the side effects. From a corporation standpoint, it would allow a company that has a drug coming off patent to get a new patent issued and continue to make some of the profits they were making in the past. So I think that is a really interesting area to look at, and we're looking very hard at that, because those companies are either going to be acquired by big pharma or have a fighting chance to make it in the next cycle of the market.